Markets dropped heavily on concerns of new economic slowdown amid possible restrictions. You came here for the truth. I'm sure you've probably already seen it. I'm going to go through all of the updates. I'll give you the information you need to know. We are talking about the markets seeing red. We are looking at what has gone up, what has gone down, and of course the future of these, talking about cryptocurrencies. We are looking at the potential no taper. Oh my goodness. All right, let's start right here. Dow tumbles 900 points for the worst day of the year. The S&P drops 2%. I will show you the charts in a moment, but I'm sure, as I said, you've probably already seen the data itself. Oil drops 13% in the worst day of 2021. Banks breaks below 70. Wow. We were talking about $100 barrel of oil. And even Goldman Sachs was saying $300 plus. And now suddenly it's 70. So we never really know, but it was certainly overstretched at around $85 a barrel for WTI. It was certainly looking stretched. However, this is a whole different situation. Just like we saw in 2020, early 2020, where, hey, everything's great, everything's fantastic, don't worry about it. And then it was basically overnight where everything changed. As I have said about oil and about other commodities, this is really reliant on the demand. And of course, should there be any recession or worse, that will turn around on a dime. But we know because of supply chains, because of, there's so many different things that I've talked about here, that this is the kind of thing that ultimately you have to understand how the markets react to it. It's always forward looking, as they say, but the economy is a whole different story. Okay, no more ranting. Let's go. You can see the prices right here. WTI crude 68, but the Brent crude 72. So that gap has widened. I previously covered how these were about $1 difference, and now they've moved to about $4 difference. Take a look here. Brent 1 day change in percentage terms. This has not happened many times. Yes, back during early 2020, we did see that to be the case. And also in 2001. Then you have this. Today's move in oil is equivalent to the market pricing in a 4 million barrel per day hit to demand over the next 3 months. This just shows you the significance of how hard oil was hit, along with all the other markets. A 4 million barrel per day, and essentially saying that, okay, suddenly we're going into lockdowns. People are staying home. They're going to be restricted in one way, shape, or form. We're going back into March 2020. That means less cars on the road. That means less stuff moving around. That means more purchases online. There are all these different things. All right, so and then here, the sell-off was likely exacerbated by crossing through the moving average support lines as well as negative gamma effects. So you have this as soon as it moves past any of the moving averages, whether that's the 50-day or the 100-day as they're showing here, or the all-important 200-day moving average. As soon as it breaks past these points, then of course you have the computer algorithms which are trading based on that information. Okay, that's all they're trying to say. Bitcoin enters a bear market as risk assets plunge. This is what I have said previously. Many people had said that if we enter a correction and we go into a bear market in stocks, then Bitcoin is going to rally. Well, I have always said that, number one, we do not have enough information to indicate that. And we can look at what we do have, and it suggests, as they're saying here, risk assets sell off first when there is concern. That's what's happened here. Now, if we go into a deeper, hard recession or worse, then certainly anything is possible. We don't know. But based on what we have at this time, this is what we're dealing with, okay? A lot of people right now are really, really overstretched. You could see the markets. What I'm showing you here is S&P 500, the Dow Jones, the NASDAQ or the QQQ, and then the Russell, okay? So small caps obviously getting hit harder than all the rest. This just gives you an idea of what has happened in a matter of one trading day. Now, that's only one day, but it just shows you, okay? Now, if you look at the way I look at these markets, it kind of makes a lot of sense. Something had to happen at this point, whether it was this or something else. But the market had been trending down in terms of its indicators, looking for more bearishness. It was just looking for something. Now, we are technically oversold on the small caps on the Russell, and I'm interested to see what happens over the next little while. You could see Bitcoin getting pounded down, among other things, is just looking on 3 different time frames. But this shows you what happens. Look, Bitcoin or oil or any of these other assets were really, really high previously, on a technical basis. So there are always going to be corrections that happen. Whether they'll be prolonged, long-lasting, we'll have to see. And this is just, this is just information. I'm not telling you what to do with your money and so on, but I want you to look at this. Boeing and airline stocks tumble. We are, of course, concerned right now. Travel curbs. South Africa is saying, you're overreacting perhaps because all these countries started to implement these travel curbs. That's going to hurt their country's tourism and free flow of people coming in and out and so on. Now, the reason I mention this is that if you look at the changes that have been happening recently, I don't think I pulled that chart. I was looking at a chart today, but what's happening here? If we go back into lockdowns, if we go back into all these different things, what does that do for the stock market? Well, certain companies benefit. Zoom is going to benefit. Amazon is going to benefit. Netflix is going to benefit. Peloton's going to benefit. All of these different things. And so that doesn't necessarily mean just because the last time it did, but I'm just looking at it through the lens of the investor. And already we have seen over the last couple of days these changes. So sort of that stay at home looks a lot more attractive than the opening and the out and about kind of things. And the restaurants, again, I'm really, really concerned about them because they just got back on track. And we'll see what happens. Wall Street's fear gauge surges as new strain hits the markets. The VIX jumps the most since February, and I believe they have it here. But you can look at the VIX. Just take a look here. Okay, that is a big bounce in a single day. Haven't seen this since when? Oh, that's right, back in late February of this year. These kind of jumps are of course not, you don't get them too often, but I think it's important to watch out for. Now, these are the tech stocks. These tech stocks have been attacked left, right, and center for things that are going on, and you really can't talk about it on these platforms. However, antitrust tech bill gains bipartisan momentum in the Senate. Google, Amazon, Apple. All right. These companies here, they've got the billions, they've got the trillions, and they're throwing that into their lobbyists who will then help to at least push this off or whitewash it or whatever to try and get this from not happening. This, of course, not an antitrust or any sort of news like this is always going to be, or any changes or any regulations, anything is going to be bearish. But it has to happen. Just talking about it is not going to do necessarily anything. We've seen that. Now take a look here. Many people have asked, if we go into lockdowns, if there's any concerns, the Fed's not going to taper. Well, first of all, they already started tapering their purchases. However, take a look. Fed's Bostic plays down the risk and is open to a faster taper. All right? Saying it's, we're not necessarily, at this point, they're not even talking about it officially. Okay, so this is what he's saying. If everything stays where it is today, then we're going to be continuing or potentially accelerating our taper here. I am very open to accelerating the pace of our slowdown in purchases. For me, early second quarter, late first quarter of 2022 are all in play as reasonable alternatives for when we might stop our purchases if the economy's momentum continues as it has over the past few months. So that's it. So I think that's important to note to see how this is affecting everybody on all different levels. If you do appreciate this information, simply hit that thumbs up button because it supports the channel. I do appreciate that very much. All right, just hit that button. It's right down there. And this gets the information out to people who have no idea about the Money GPS at all. That's how this works. And I do appreciate you clicking that button. And if you haven't seen this video yet, you definitely want to check it out. All right, just click it and I'll see you there.